Hello, ladies and gentlemen. Good morning, good afternoon, and good evening all to you all, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you all to yet another promising edition on the Forex Morning Mastery. It has been a wonderful week for us all on the assets we've been monitoring so far, and today being the last trading day of the week, we are going to be reviewing how well these assets have done so far this week, and of course use the historical data we find on the chart to identify potential trading opportunities as market participants round off their trading activities today. It's very chilly here in this part of the world. It's about I think about 22 degrees Celsius from the 25 degrees Celsius here. Very chilly. And let me know in the comment section what your weather is looking like and from which location you are tuning in from. Well, so far this week we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And in fact, we've done tremendously well on all of these assets, and in fact in the last 24 hours we were able to capitalize on the weakness of the US dollar following the softer than expected inflation data from the United States, coping in some significant amount of profit along the way. We are going to be looking at all of this today and how we intend to run through today's trading activity. And another thing we need to also take into consideration is the peculiarity of today's trading activity. Now, today being the last trading day of the week, it is expected that market participants will be rounding off their trading activities, and this could result in profit-taking activities ahead of the weekend. And you know the kind of era we are right now, where geopolitical tension is on alert and anything could happen during the course of the weekend. So we could see major key players taking some profit off the chart, which could result into reversal setups or situations where profit-taking activities will happen. So we are going to be taking all of this into consideration while we review today's market structure. And I encourage us all to stay tuned in, be patient, and trust me, I have simple, insightful trading setups to guide our trading decisions today. And I also have an exciting news for all of us today. I will keep it for the later part of the session, and I hope you'll still be around to hear what I have for you. So stay tuned in and do not miss out on this insightful ideas and session we are going to be looking at today. And for those of you who are joining us for the first time, I'm always excited to welcome you all on board. Glad to have you around with us this morning. And I do know you will be. It's of course normal for you to wonder what this is all about. What is it that we're really doing here on the Forex Morning Mastery? Well, on the Forex Morning Mastery, we come together to review and monitor the assets I shared during the course of the previous weekend. So I usually share a couple of assets during the weekend, indicating my thought process, my ideas, and what I think is likely going to be happening in the following week. And of course, during the Forex Morning Mastery, we come here to review them and do follow-up detail and see how we can maximize any profit, manage our trading positions, how to navigate the correct market structures. And this session usually happens 3 times in a week: Mondays, Wednesdays, and Fridays. And it's important to also note that this is not a signal service platform, but instead an avenue where you tend to get to understand together as a community, tend to understand how market participants are behaving, and of course use that information to identify areas, zones, and level where it is most appropriate to either buy or sell. And depending on what type of trader you are, be it a scalper, day trader, swing trader, or positional trader, you can use this information to tailor your approach into execution. So I also welcome you all on board once again and encourage you to actively engage in the comment section. And if you have any questions whatsoever as regards to the financial market or any of the assets we are looking at, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. And if you found this content helpful and useful in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. Let's make the number of people watching the video tally with the number of likes we have on the session. So thank you very much, guys, for your support, and do not forget to drop in the hashtag Forex Morning Mastery in the comment section. This helps boost the SEO of this channel, pushing it, allowing the algorithm to push it to a wider audience of traders who may find the content beneficial to them too. So thank you very much, guys. I'm very excited to have you around. I'm yet to see your comment. What's the weather like from your own end? What's your location? Where are you tuning in from? What's the weather like here? It's very, very chilly. We are running a 25 degrees Celsius temperature on this part of the world. That's where I'm wearing my cardigan right now, and I'm very excited to be part of the session today. So let's see in the comment section. Let's relate together and make this a little bit much more lively. So with that being said, we are going to be diving right into the business, and as always, the first thing we normally do in this community every morning, it's our routine actually, is to check on the economic calendar. We want to look into what the major drivers, what's the major economic event that will be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the charts, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been looking at for this week, we have been monitoring economic features from both the United States and the United Kingdom economic docket. And in fact, we usually look out for high impactful events, except for days when we do not have any high impactful event. Then we take it a step further to look at mid-tier economic features, just to have an idea into what will likely be driving the sentiment in the market. Well, so far this week we've had some bunch of mid-tier economic features which obviously has influenced the sentiment in the market. We had the BRC retail sales like for like from the United Kingdom on Monday. We had the preliminary GDP from the United Kingdom yesterday, which showed that the United Kingdom expanded by 0.4%. It was considered to be a mid-tier economic feature, and of course we saw how the pound sterling took advantage of this, and of course took advantage of the weaker US dollar to ramp up some momentum into the last trading day of the week. So we are going to be looking at the chart today. We are going to be looking at how the market had behaved so far and what are the chances that this uptrend continuation will happen. Then on Tuesday and Wednesday, we had this high impactful event, that is the Fed's Chair Powell's testimonial before the US Congress, and this event is considered to be one of the highly anticipated event for this week, as it's expected to give market participants an insight into the future interest rate decision of the Federal Reserve, economic outlook of the United States, and the Federal Reserve's policy direction for the year 2024. And of course, this has led to increased market volatility as it had shaped the expectations regarding the Fed's action. Now, we had one of the major highlights from the testimonial was the fact that the Fed chairman did emphasize that inflation is gradually easing in the United States, and this has of course ramped up the sentiment that the Fed may likely cut interest rates in the month of September. So this is more or less a dovish outlook, and of course the market had followed suit by dropping the US dollar to buy other safe haven assets in the market, and this has resulted in a decline in the value of the US dollar. Then on Thursday, that was yesterday, another highly anticipated event came in, that is the consumer price index, which is a measure that examines the average change in prices paid by consumers for goods and services in the last 30 days, that is the last 1 month. And of course, like I did tell you on Wednesday, that if the data comes in higher than expected, this could lead to concerns about inflation impacting the market sentiment, as it may prompt expectation of tighter monetary policy control to control rising prices. And of course, we saw what happened yesterday. The data came in way below market expectation. So we had the month on month coming in at a deficit of 0.1%, which was way below what the market was expecting at 0.1%. And of course, this data here was also below the previous month data, which came in unchanged. And of course, the year on year came in at 3%, 0.1% lower than market expectation, and 0.3% lower than the previous month data. So this is pointing at a disinflation in the United States, and this is coming up from the backdrop of not too impressive US economic data so far in the last couple of weeks. Remember, we saw contraction in the US labor market. We saw consumer sentiment index not doing very well. We saw the manufacturing sector not doing very well. The service sector was struggling to gain some traction, and these all have culminated into a CPI data projecting that inflation is easing in the United States. And for those of you who have been with me for a while, we all know the implication of a lower CPI data, a lesser than expected CPI data. Now, with this in mind, the chances that interest rate will be cut has increased, and when interest rate is cut, what happens to the US dollar? The US dollar tends to drop, because majority will start dropping the US dollar, because the return on investment, I mean the interest rate differential, isn't that significant anymore, so they'll start dropping the US dollar. Then fast forward to today, Friday, July 12th, we are going to be looking at the producer price index, which is also considered to be another inflationary data. And for those of you who don't know, this data measures the average change over time in the selling prices received by domestic producers, and of course this excludes the volatile food and energy sector. Now, it is expected that a higher reading, that is higher than the market expectation, will be suggesting potential inflationary pressure impacting market sentiment as well, by signaling changes in production cuts and potential effect on consumer prices. Now, of course, everyone is looking forward to something below market expectations here, but let's look at what the data is saying here. Now, for the previous month, that is the month of May, the data came in at 2.3%, and based on what is on ground, economists are projecting a 2.5%. Now, will this be the case? Are we going to see are we going to see the data coming just as expected, below expectation, or beyond expectation? If you will ask me, I think the data will come in below expectation, considering what happened yesterday from the consumer price index. So we're looking forward to see what that data will be saying. And if it does come in below market expectation, there is a high chance that the dollar will continue to drop to the downside. Then finally today, in about 6 hours from now, 5 to 6 hours from now, we are going to be looking at the publication from the University of Michigan, and that is the Consumer Sentiment Index. Now, this data here gauges the prevailing sentiment and confidence levels among consumers within the United States. And it also goes on to provide us with valuable insight into potential shift in economic conditions. And it is important to also note that changes in consumer sentiment can influence spending patterns, impacting various sectors and market. Now, if the consumer sentiment index is high, it shows that consumers are willing to spend money in the United States. But if the consumer sentiment index comes in below market expectations, it shows that a lot of people are saving their money and do not want to spend money, probably because prices are too high, price of goods are too high, or probably due to no much confidence in that particular economy. So if we look at the previous data here, the previous month came in at 68.2. Market expectations are looking at 68.5. In fact, the last couple of months, we've seen the consumer sentiment decline with time. So will it continue to decline this time around? Well, let's wait and see. This is coming up in about 4 to 5 hours from now. So I encourage us all to mark out this timing so that we are be around to be part of the potential move when it finally happens. So for today, Friday, July 12th, we are looking at two high impactful events, the PPI data and the consumer sentiment index, all of which are coming in at in about 3 to 5 hours from now. So let's make sure we mark out the timing. So the next thing we are going to be doing right now is to go right into the chart, and let's look at how market participants are anticipating this event. And of course, the anticipation of this event will reflect on the chart as price action. So we are going to be looking out for patterns and structures that we are going to be using to navigate this current market dynamics. So with that being said here, okay, I see you, Edward Daffin. Thank you very much. Guys, please help drop the hashtag Forex Morning Mastery in the comment section. It helps. It goes a long way in helping the algorithm push the video to a wider audience of traders. And thank you very, very much as you do so. So Edwin says is calling in from Detroit, Michigan. Wow, that's great. Glad to have you around with us. Good morning to you. What's the weather like over there? Is it as chilly as this part of the world, or are you is it just okay or moderate? Let me know in the comment section. All right, so with that being said here, we will be diving right into the business. And as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. Now, on the USOILSPOT, we've done tremendously well since the beginning of this week. Remember, at the beginning of the week, we were selling the USOILSPOT, which could be considered to be profit-taking activity after price action found a new year high around the $84-85 area. And of course, during the second half of the week, we begin to buy the USOILSPOT after price action broke out of that descending trend line we identified on the 1 hour time frame. So before I go into the details here, I would like to emphasize that we are only going to be deliberating on the 1 hour time frame. That is our execution time frame, and we already done a top-down analysis on this asset on Monday. If you missed out on that session, you can check the link right in the description box below to have an insight into how we got to this point you are seeing on the chart right now. So with that being said, let's run through what really happened at the beginning of the week and what led to the decisions we made. Now, during the first day of this week, remember we had our key level at the $83 area where we saw price action for the first 7 to 8 hours was oscillating within that structure and leading into a situation where price action was confined within the $83.30 level and the $82.75 area, $82.80 area, to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we identify this kind of range bound structure, we exercise patience due to the indecision going on, waiting for market participants to finally make a directional decision, which will reflect on the chart as price either breaking out of the resistance line to give us an opportunity to buy, or breaking down the support line of that range bound structure to give us an opportunity to sell. And of course, at no point in time did we see price break out of the resistance line, so it was more of looking out for selling opportunities as price continued to trade below our key level. So we had the privilege of joining our first sell position for the week, had the breakdown of the $82.80 level, remember. And of course, for those of us who missed out on this opportunity, we saw price come back, retest the structure, and look at what happened. Price dropped to the downside, and we had a how many pips move was that? About 190 pips move. And remember, we had multiple entries along the way. We had the $82.50 level, we had it more at the $82.15 area, and of course we saw how the $80.90 level became a barrier for sellers to continue that downtrend scenario. And in fact, the resumption of buying pressure around this area begin to give us a signal that we may likely be seeing a reversal setup. And to position ourselves for that reversal setup, remember we had this descending trend line marked out, which of course had been supporting the bearish momentum since the beginning of the week. And you know how we use our descending trend line. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that supports the idea of selling the asset. Now, the only condition that will make us buy in this case scenario is if the descending trend line is breached and broken to the upside, which was exactly what happened on Wednesday's trading session. And to navigate and capitalize on that opportunity, we marked out the $81.75 level, which beautifully shares a confluence with that descending trend line. And after identifying this reversal setup, this double bottom structure, the breakout of the confluence at the $81.75, and that trend line was a beautiful opportunity for us to join the uptrend move. And in fact, for those of us who missed out on that opportunity, the market came back a couple of times to retest structure. We saw a retest right there on Wednesday, and yesterday we saw price come back, retested the structure, and since then price action had continued the uptrend move. And for those of us who did capitalize on this opportunity, well done and kudos to you. Remember, at this moment we have about 3 positions running in profit right now, where the first one is running with about 190 pips, the second one here is running with about 90 pips, and the third one is running with about 70 pips in profit. So we are rolling with about 360 pips in profit on the buy position. And that's remember we had a couple of profits at the beginning of the week as well. So we're doing very well on the USOILSPOT. And for those of us who are yet to hit TP target, depending on where your TP target is, that is, you have an active buy position running at this point, it is high time you want to be moving your stop losses and let's secure the current buy position. And if you would ask me, I think the most appropriate area is the resistance line at the beginning of the week, which is the $83.30 area. Remember, we do want to be giving enough breathing space for price action to move around. So moving our stop losses within this area looks much more reasonable. So let's move all stop losses, secure our position around that area, and let's see how the market is going to be playing out in the next couple of hours. Now, with a well secured position at this juncture, what is going to be our plans for today? Or are there any chances that the momentum will continue to the upside, or will sellers come in to take over the market as the market participants round off their trading activity. Well, if you would ask me from a sentimental perspective, I still think the path of least resistance for the US crude oil is still to the upside, and in fact we have various factors behind the scenes which has been supporting these buyers. We're talking about the US consumer price index from yesterday, which came in lower than market expectation, and this has of course boosted market expectation for a potential Fed Reserve rate cut in September, and this prospect of easing monetary policy would likely stimulate economic activity and of course boost oil demand. And you know how the USOILSPOT is considered to be a US dollar denominated asset, so whatever happens to the US dollar has a high chance of also influencing the USOILSPOT. Now, what do I mean by that? I've explained this several times in this community, but I'm willing to tell you more if especially for those who are joining us for the first time. Now, because the USOILSPOT is a US dollar denominated asset, other currency asset needs to convert their currency to a US dollar before they can buy the USOILSPOT. Now, if the US dollar is expensive to buy, then it will be very expensive to convert their currency assets, their currency to the US dollar, and this will definitely reduce the demand for this crude oil. Now, if the demand if the US dollar becomes cheaper, then people will be willing to convert their local currency into the US dollar to just ramp up their demand for USOILSPOT. And you know, our simple economics tells us that if the demand rises, what happens to prices? Price will definitely rise. So that is the dynamic behind the relation with the US dollar. Then another factor here is the demand signal, which remains robust. Yesterday, according to Reuters reports, yesterday the US government released a report showing that demand reached 9.4 million barrels per day during last week's trading, marking the highest level since 2019. And of course, we also learned that jet fuel demand on a 4-week average basis also reached its strongest point since January 2020. Now, this surge in fuel demand has driven US refineries to increase their production activity, leading to a drawdown in crude oil stockpile. Now, for those of you who were with me on Wednesday, we had the API report, which revealed that there was a massive drawdown in crude oil stockpile, and then we also had the EIA report on Wednesday, which also came in with a massive drawdown. So what this simply means is that the supply in the market is not enough to meet the demand from the market, so they had to rely on their stockpile to meet the demand for oil. So this will continue to increase the prices of oil. Now, like I said earlier, based on all these various factors, the path of least resistance is looking very bullish. But despite this prevailing bullish momentum, we cannot ignore the potentials that sellers could come in as a result of profit-taking activity. So we need to take that into consideration. That is why it is important that we move all stop losses and secure this current buy position. Now, as it is right now, if you would ask me, I will continue to look out for patterns and structures that support the idea of buying. Now, in this case scenario, let me zoom into the current structure here. We have seen a situation where price has broken out of the $83.30 level, and there is a chance that price action could still retrace back into structure in an attempt to continue the uptrend move. So if that is going to be the case, we will be on standby within this $83.30 area to join that uptrend move. So we shall wait and see if the market is going to retrace back into structure. But if it doesn't retrace back into structure and instead it continues in such a way that it transitions into an uptrend continuation pattern, then we will wait for the breakout of the resistance line of the pattern to continue the uptrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us all updates as at when due. So asking me right now, the path of least resistance for the US All Spot is looking bullish, and the only condition that will make me sell is for price action to drop back below that key level at the $83 level, and not only drop below that structure but find selling pressure around that particular area. So if anything of such happens, definitely I will be giving you updates on my TradingView and Telegram platform. So this is my simple view on the US All Spot today. Please remember to move all your stop losses, secure the current buy position as we look out for new buying opportunity. Then to cap it, I have another structure here which will make things easier for us to navigate the structure. If you look at what has been going on here since Wednesday, you can see that price action had consistently found higher highs and higher lows, and if we connect the series of higher lows here, we have a beautiful ascending trend line to work with for today. So if price action drops, if we see selling pressure around that area, don't let us panic. Price still remains above our ascending trend line, so we still have a bust up within the 83 and the $83.30 level to look out for more buying opportunities here. But if price drops below the ascending trend line and the key level at the $83 area, retest of structure will be a beautiful confirmation to join a decline to the downside. So let's see how the market will play out here. The next couple of hours will be giving us an insight into what is likely going to be happening. So stay tuned and be with me on both my TradingView and Telegram platform to receive these updates as at when due. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And do not forget, I told you earlier, I'm having a good news to share with you during the later part of the session, so you don't want to miss out on that news. So stay around, grab your favorite beverage, and stay around to hear what I have to say for you. So see you in about 10-15 seconds from now, and do not forget to use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. See you soon. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and all I've said so far has been quite explanatory, and I do hope you've marked out these levels accordingly, and let's ensure you are ready to go. So what do we have here? I can see Mansoor. Good morning to you, Mansoor. It's been a long time since I saw you. Trust you're doing very well. And how are you doing today? I see you Adelowo Adedinro. Good morning to you. Trust you are doing very well. Glad to have you around with us today. Okay, so Okay, who else is here again? I can see Richard Blackett. Thank you very much. My namesake, Sheriff Abdul Kadiri. Good morning to you too. All right, I'll take that as a compliment. Adelo Adediro. Good morning. Glad to have you around with us this morning. All right, so with that being said here, we shall be diving right into the next assets on our watch list. Stay tuned in, guys. So the next asset we are going to be looking at today is going to be the GBPUSD, the British pounds against the US dollar. And in fact, we have the GBPUSD is one of the most profitable assets on our watch list. In fact, all of the assets we monitored this week are doing pretty well at this point in time, and the GBPUSD is not left out of this race. Remember, we have been buying the GBPUSD since the beginning of the week, though the week never started very well for us all, as the first week we had the first couple of days we had a couple of losses as market participants went through an indecisive phase where price action was oscillating within a particular range for about 24 to 36 hours before the traction finally began on Wednesday's trading session. Now, for the sake of educational purposes, let's run through what really happened at the beginning of the week right here on the 1 hour time frame and what led to the decisions we made. And please remember that I already done a top-down analysis on this asset on Monday. So if you want to have an insight into how we got to this point, you can check the links right in the description box below for an insight into this market dynamic. So at the beginning of the week, it was more of a range-bound structure. Remember, we had a range where price was confined within the 1.28190 and the 1.27850 area. Though the week started on a bullish note, we saw price started around the 1.27850, giving us a support line to work with, and we were privileged to capitalize on our first buy position for the week at the breakout of the 1.28150. Price moved about, how many pips was that? Price moved about 29 pips thereabout before the bearish momentum came in. We were taken out of that one at break even, and then we had another buy position triggered around this area. We were stopped out on that one. We had a sell position triggered at the breakdown of the support line. We were stopped out on that one as well. So we had two losses during the Monday, Tuesday trading session, but thank goodness we were resilient with our analytical approach. We were faithful and we kept on looking out for that trading opportunity. So this is where resilience, perseverance, and commitment to our analytical approach comes into play. Now, with this consistency, right here on Wednesday, I did updated us with the current market structure, having this ascending trend line. Let me zoom out so we can see what I'm talking about here. So we had a couple of ascending trend line during the second half of this week. The first one was right here, and I projected this one to capture the lowest point for this month, which is at the 1.26250 area, giving us another ascending trend line to work with. And we saw here on Wednesday Asian session that the inability of sellers breaking down that ascending trend line was a red flag that we may likely be seeing a bullish traction resume from this particular area. And coupled with the dovish remark from the Fed chairman during his testimonial before the US Congress, the path of least resistance for the GBPUSD was looking very bullish. So in order to capitalize on this opportunity, we marked out the 1.2800 area where we said we will be looking for our next buy position in order to recoup the losses we had at the beginning of the week. And then we also added more levels like the 1.28150, and thank goodness to the United Kingdom GDP data, which came in positive. The pound sterling continued to ride on that favor to maximize the uptrend scenario. So we were in massive profit, and as at this morning I came in to see that all positions have been closed with a minimum of 300 pips in profit. And well done to everyone who did capitalize on this opportunity. Now, as it is right now, I shared with us a new update this morning, as I'm going to be looking at a new trading setup to guide our trading decision for the for the last trading day of this week. And for those of you who are with me on both my Trading View and Telegram platform, you will be familiar with this new setup we have here. Now, before we go into the technical details of this, let's quickly look into the major market drivers that has been influencing the sentiment in this market, and of course, what are the chances that buyers and sellers have as we round off this week's trading activity. Now, first of all, is the softer US inflation data, which came in yesterday. The CPI data came in below market expectation. Of course, we have been seeing this long before now. The data from the United States hasn't been impressive in the last 2 to 3 weeks, giving us signs that the monetary policy of the Federal Reserve has been very effective, and hereby reducing inflation over the last couple of months. And with yesterday's release, market expectation for an imminent start to Federal Reserve rate cutting cycle in September has increased, and this prospect has dampened the value of the US Treasury bond yield and limits potential upside in the US dollar. So the pound sterling is capitalizing on this weakness to ramp up the value. Then another factor is the strong UK economic growth. Yesterday we saw the UK preliminary GDP data coming in higher than market expectations. We saw the Britain's economy expanded by 0.4% in May, exceeding market expectation and providing a boost to the pound sterling. Then lastly is the Bank of England's stance as regards to their monetary policy. Yesterday we had Catherine Mann, who is a policymaker of the Bank of England, who emphasized that she would not be voting for interest rate cut anytime soon, as she will need to see prices drop further before considering cutting interest rate. And for me and for the market in general, this is more or less an hawkish remark, which could further boost the pound sterling. So with all of these factors behind the scenes, I strongly believe that the path of least resistance for the pound sterling still remains bullish at this point in time. Now, the question at this juncture is, what path is it going to take? Are we going to see the uptrend continue, or will price action retrace for a while, maybe as a result of profit-taking activities due to the last trading day activities, before the uptrend continues next week? Well, let's look at the chart. Now, looking at the chart closely, what I did here was to take into consideration the character of price action since the last trading week of the month of June, and what I was able to come up with here is a beautiful ascending channel. So if you connect the series of higher highs here, we have the resistance line of the ascending channel, and when we connect the series of higher lows, we have the support line of this ascending channel. And of course, when price is within an ascending channel, it makes a lot of sense that we continue to look out for patterns and structures that support the idea of buying. Now, how do we buy? Now, if we zoom into what has been going on here in the last 18 to 24 hours, you will see that following this impulsive move that started this week, our price got into the 1.295, we saw price retrace back into the 1.29, and right now we have another buy position which has been triggered at the breakout of the 1.29350, running with about 17 pips in profit. For those of you who capitalize on this opportunity, kindly move your stop losses to break even at this point in time, as we may likely see price crash to the downside, especially as we look forward to the PPI and the consumer sentiment index coming up later today. We could see some volatility happen today. So my idea now is, are we going to see price retrace back into the support line of the ascending channel, which beautifully shares a confluence with this 1.28500 area, a level which at some point at the beginning of this week was serving as, of this month rather, was serving as a selling niche before it was broken yesterday morning, as you will see here. And whenever price breaks out of a key structure like this, we expect at some point in time it may come back to retest structure in an attempt to continue the uptrend move. So in that regard, I have a buy window between the 1.28645 and the 1.28150, with the hopes that later in future we could see price drop back into that area. However, it is important for us to note that it is not all the time that the market follows this theoretical expectation. Instead, we could see price transition into an uptrend continuation pattern, which is more or less looking like that. If you look at what has happened during the Asian session, you saw following this impulsive move, price came back and then fell into a range bound structure before we saw this breakout happen. So if that is going to be the case, we will continue to look out for more buying opportunities at this point. So at this point, we have a buy position triggered. I did share us an update this morning that we'll be looking at buying above this area. If you had done so, well done to you. So all we need to do right now is exercise patience, and let's see how far this momentum will go. But for those of us who missed out on this opportunity, let's exercise patience and see how the market will react. Will price come back to retest the structure that was broken in an attempt to continue the uptrend move? If that is going to be the case, we'll be on standby to capitalize on that one. And if it continues to climb and find new highs, then I will be giving us updates on which levels that seems most appropriate to add more buy positions to our existing trade. So in summary, on the GBPUSD, the path of this resistance is still looking very bullish. We keep on looking out for more buying opportunities as long as price remains above the 1.29350. But while we're looking out for more buying opportunities, we cannot ignore the potentials that sellers could come in, bringing price back into the support line of this ascending channel in an attempt to continue the uptrend move. So let's keep this in mind, and let's keep our ideas and logic very viable at this juncture. So this is my simple view on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. If you need some further clarity, please let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. If you have any questions, feel free to let me know in the comment section, and please do not forget to give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm to promote the video to a wider audience of traders who may find the content beneficial. If you don't know, your likes serves as a form of inspiration for me to do more of this kind of content I'm doing with you guys. So please, let's click on that like button and let's support this community to grow. So in the meantime, I will be taking about 10-15 seconds off, and we'll be right back in a moment. Stay tuned in. All right. So, in the absence of no questions, I'll take this as a confirmation that we are all on the same page. So, let's see how the market is going to play out in the next couple of hours. And of course, we are always going to be ready to capitalize on more trading opportunities at this juncture. So, with that being said, let's dive right into the final assets on our watch list for today. So the final asset on my watch list for today and for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And the gold spot for me is the most profitable asset on our watch list for this week. And we've been buying this asset since the beginning of the week. And on the gold as well, we had a couple of losses during the first trading day of the week after the market went through an indecisive phase, as it was not sure of what is likely going to happen. And of course, this was expected. As we all know, everyone was looking forward to what the Fed chairman is going to be saying, and a couple of Fed speak that was happening on Monday and Tuesday, and of course the all-important CPI data which came in yesterday. And at the end of the day, it was more of a bullish trend as price action continued to the upside, reaching its highest point since the month of May of this year. Now, before we go into the new trading setup, in fact, the new trading setup for today is what we are looking at on the chart right now. Let's quickly look at what really happened for educational purposes. So let's look at things in retrospect to really understand how we had navigated this market. And of course, this usually and subconsciously help us to understand what we need not do again and what we need to continue to do in the future when we navigate this current market dynamic. So let's look into what happened at the beginning of the week. Now, at the beginning of the week, it was more of a strong selling niche. Remember, we were selling the XAUUSD during the first couple of days of the week. Look at what we have here. So this was a structure we were looking at as at the first day of the week. Now, we had a range bound structure. It was quite clear that the market started on a bearish note. This was where the market started on Monday, started at around the 2,391. We had a couple of rejection of the 2,391 to emphasize that sellers are getting stronger. Now, we had the range bound structure. We had price confined within the 2,391 and the 2,381 during the first 10 to 12 hours of the week. And of course, you know how we treat our range bound structure. We wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And as at the time we did our first session for the week, price had already broken down to 2,381. And what I said here is that if price comes back to retest the structure, we are going to be selling. And with a sell limit order below that area, we had our first sell position triggered, and we run the momentum all the way into the 2,368 before we begin to notice buy pressure resume around that area. And due to this buy pressure resumption on the chart, I was thinking that this is the time to continue the uptrend. Remember, the trend has been very bullish, and if you saw my video on the XAUUSD, let's look at that together on the 4 hours time frame. You will see that as at the beginning of the week, let me reset this chart. As at the beginning of the week, we had our key level situated at the 2,350, and we were thinking that price will continue to the upside from that area. And the sudden emergence of buy pressure around that area incited the idea that we should neglect the bearish buyers and continue the uptrend move. And as a result of this observation, we had a simple setup on the 15 minutes time frame, and of course we took advantage of this buy position right here, but unfortunately that position did not do very well and price dropped significantly, taking us out of that position in a loss, and then it continued to the downside. And thank goodness we had a sell position triggered below the 2,368. We had a sell stop order right there, and price continued and dropped to the downside. Now during the midweek, we begin to notice some new development on the chart, and in fact we had a new trading setup on this chart. And what we did on Wednesday was to acknowledge this ascending trend line, a trend line which has captured the series of higher lows in the last 2 to 3 weeks. And when we connected that trend line appropriately, we had this whole structure marked out. And of course, you know how we treat our ascending trend lines. As long as price remains above them, we'll definitely be looking out for patterns and structures that supports the idea of buying the asset. Now with this in mind, and coupled with continued buy pressure around this area on Tuesday, remember we had a loss here. We hope that we had buy, but we were taking out. We had our self position at the breakout of the 2,365 level to continue the uptrend move. So we had price climb up, breakout at 2,373, gave us more buy positions. We had the breakout of the $2,381 area as well, giving us another buy position, though the 2,381 did not do very well as we were stopped out on that one, but the first two positions did very well for us. Now during our live session on my commentary on Thursday, we had new buy setups. As you will see, price rode and we capitalized on this one, and following the CPI data yesterday, which further incited the uptrend continuation. And remember, at the beginning of the week, we said our TP target is going to be within the 2,420 and the $2,410 area. Depending on whichever level you place your TP target, you must have had your TP target triggered at that point in time. So we were able to close this with over between 300 to 400 pips on the XAUUSD. And for those of us who capitalize on this opportunity, well done, and kudos to you guys. Now as it is right now, we're having a new trading setup emerge on the chart as we saw selling pressure resume during the later part of the New York session yesterday, which for me is considered to be a profit-taking activity, as those who capitalize on this opportunity may want to be taking some profits of the chart following that move, and this has resulted into this kind of scenario we are having right now. Now with the way things are going right now, the question on everyone's mind is, how far will this bearish momentum go before the uptrend scenario will happen? Now why are we still keen on buying the XAUUSD? Well, there are various factors behind the scenes which by now we are already familiar with, one of which is the major one, is the amplified market expectations as regards to Federal Reserve interest rate cut in September, which is bolstered by the softer US CPI data that came in yesterday. Then another factor behind the scenes that could continue to support the bullish traction in this market is the escalating political uncertainty in the US. Remember, following the Trump and the Biden debates last week, we're beginning to see some sentiment shift in favor of Trump. and this of course has favored an imbalance in the US economy, as majority don't know what his policy is going to be like, and everyone is favoring that Trump will likely be the winner of the next election. So things are not looking very certain at this point in time, and this could lead into investors moving their capitals from currency assets, US dollar, into gold, non-yielding asset, gold. Then another thing is the geopolitical tensions in the Middle East as well, which usually increases the appeal for safe haven assets such as gold, and of course the uncertainty in the Europe geopolitical tension too as well. So all of this for me supports the idea that the path of least resistance for gold is still looking very bullish. However, in as much as we're looking out for this bullish opportunity, it is important to also note that profit-taking activities could happen ahead of today's important US macroeconomic data. Remember, I told you earlier, we're looking at the producer price index. We're also looking at the US consumer sentiment index, all of which are going to be giving the market an insight into the Fed's interest rate trajectory for the year, and of course give fresh impetus ahead of the weekend. So as it is right now, the question on everyone's mind is how far will this bearish momentum go before the uptrend momentum happens? So with this question in mind, I have a new setup to guide our decisions today. So what I did here was to consider the character of price action since the beginning of this week, and you can see it is quite obvious that the market has been finding higher highs and higher lows. And if you connect this appropriately, I have a couple of trend lines here. The first one is this one right here, and then we have the second one right here. Now, price broke out of the first one yesterday. We saw it right now. And from a technical standpoint, when price breaks out of a key structure like this, we expect at some point in time price will come back, retest the structure that was broken in an attempt to continue the uptrend move. That is one scenario. But if price breaks down the first ascending trend line, that doesn't necessarily mean that sellers have come to play, but because we can see that we also have another ascending trend line here which has been supporting the upward trajectory, which could also incite an uptrend continuation. So with this understanding in mind, what I did now was to bring out my Fibonacci retracement tool, run it through the impulse leg, and then aim at an area between the 50 and the 78.6%, which happens to be our golden zone area. So that is an area where I am projecting where the bearish momentum will get into before the emergence of the uptrend continuation. So I'm looking at price dropping into the buy window here, that is between the 2,396 and the 2,385 in an attempt to continue the uptrend move. And look at how beautifully this golden zone area shares a confluence with that second ascending trend line. So this simply means that if price breaks down this ascending trend line here, we are looking at somewhere around this area to look out for buying opportunities. So we could see an inverse head and shoulder pattern to continue an uptrend, or we could see price drop into this area to transition into a double bottom structure where the breakout of the neckline will be all we need to continue the uptrend move. Now, what happens if price does not drop into this buy window? Yes, of course, it usually happens. It's not all the time the market follows through with our theoretical expectations. So what happens if price does not come into that area? Now, the first thing you will look at here is that price is back into this ascending trend line. And since price tested this ascending trend line in the last 4 hours, we have been noticing buy pressure around that area. Now, this could transition into a reversal pattern as well. Now, if we scale down into a much more lower time frame, let's say the 15 minutes time frame, we could likely see a reversal setup evolve here. Now, if this happens, we have a neckline. Let me use my line chart instead so that we can have specific points of connection. We are looking at this 2,480 $8 area has the neckline of the structure. So I encourage us all to mark out this level on our chart right now, as we are going to be needing it to continue the uptrend if ever price breaks out and retest the structure. So if price goes to break out, retest the $2,408 area, price will be back above that ascending trend line, and it will be a good opportunity to join the uptrend move. Then we could be looking at adding more buy positions at the breakout of the 2,420 to maximize the uptrend move. So that is one scenario we are looking at today. And then if I mark out the trend line on this one, on the retracement move, we are looking at something like this. So bring out our candle chart back, and then we do adjustments. So we have something like this. Let me give this a red color. So look at what we have. So by the time price breaks out the 2,408, it would also have broken out of the trend line, anticipating the uptrend move. So will that be the case today, or will price action drop further into this trend line before the uptrend scenario happens? So we have two spots, two zones, two structures that we are going to be using to guide our trading decisions today, and this requires a whole lot of patience. So let's see how the market will play out around this area. So we have the 2,408. If it gets broken and retested, we are continuing the uptrend move from there. But if price drops into the 2,395, 2,396 area and buy pressure resumed from there, we will be continuing the uptrend from that particular area. So I'm still looking forward to buying opportunities in this market, but it is subject to how market reacts to this current structure we have here. So I hope I made myself very clear on this one. If you have any questions, feel free to let me know in the comment section. And in fact, if I am going to be selling, the only condition is for this second ascending trend line to be breached and broken to the downside. That is from a long-term perspective, which is usually what I always look out for. Breakout of this trend line, breakdown of the 2,385 before I can consider selling this asset. So I maintain a bullish bias on the XAUUSD today, and if anything new happens during the course of the session or prior to the PPI data, I will definitely give us updates on both my TradingView and Telegram platform. So this is my simple view on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off, and let's see if there are any questions whatsoever before we move into my good news that I have for us today. So let's see if there are any questions before I dabble into what I have for you today. Stay tuned in, guys. Don't go away, because I have a good news for you guys. All right. All right, so in the absence of no questions, so let's go into the final part of today's session. So like I was saying earlier, I have some trading news to share with you all today, and starting from next week Monday, I will be launching an exclusive live stream session for premium viewers right here on YouTube. And this idea is coming from the I've gotten a lot of feedbacks, a lot of comments behind the scenes as regards to trading smaller size accounts. We have majority trading a $200 account, a $500 account, a $1,000 account, and navigating this kind of account to multiply your profit over a shorter period of time has been a major challenge for many traders as regards to risk management strategy and the like. So I want to put myself in that shoe and put myself into the public and let people see me do this thing live on this platform. So I am launching a go challenge. I call it a go challenge. The reason is simply because of my favorite asset is gold, and I want to be trading gold live. You'll see me in person and you have the privilege to watch me trade this my favorite asset from the London session straight into the first half of the New York session. And you see my challenges too as well. You feel into my challenges as well, and you see how I do things, and I go through the same thing you also go through during the tensions in trading activity. So we are going to be kickstarting this. So what I'm doing now is to start with currently I'm looking at a $200 account challenge, $200 account size challenge. Yes, you heard me right. I'm going to be trading a $200 account size, and I'm super excited to see how much we can grow this account within a month. So I hope you all find this as exciting as I do, and join me on this journey starting from next week Monday. The link to the live stream is right in the description box below, and it comes with a small membership of around $50 thereabout. I'm not sure it's up to that anyway after the conversion, but it's a $50 account. $50 you will have access to see me live trade this gold asset during the course of the week. Now, what is the approach to this? I'm going to be starting the week with a swing trade. That is on Monday. It's going to be a swing trade. We are going to have a long-term position for the week, and then if we have short-term trading opportunities during the day during the week, I will be taking advantage of that opportunity, and I'll let you know as well, so you can also join me as we do this together. So I hope you're excited about this. The links are right in the description box below. Click on that link and you will see me trading live here on this platform from next week. So I look forward to seeing you guys. So that's the news I have for you. So I'll be starting with my favorite asset, which is gold. So let's see how far a $200 account can go within 30 days. So it's a challenge. I hope we take on this one together, and let's see how this is going to play out in the next 30 days. So I look forward to seeing you guys in this on this platform during the course of the session. So like I said earlier, the links to the live stream is right in the description box of this current video you are watching. So click on it, join it, and let's trade the gold together. So it's a gold challenge, and let's see how this is going to work out for. I'm so excited about this. I want to see how a $200 account can grow. I've never traded a $200 account before, so I want to put myself in your shoe, and let's see how we can move a $200 account with adequate risk management strategy as we continue to monitor price action on my favorite assets. So I look forward to seeing you guys from next week Monday, and let's see how this is going to be playing out. All right, so Richard Blackett. Okay, so I knew that a lot of people amongst us would do this. Usually I clamor for a larger size account, but I realized that a lot of us do not have this larger size accounts. So we usually look out for short-term trading opportunity with small lots, small stop loss size, and I think this will resonate with a lot of us in this community. So let's go on that one. Let's go gold, and let's see how far a $20 account will go within a month. All right, guys, so I see you, Mansuru. You are very much welcome. Adelo Adeniro, Chop Knuckle. All right, guys, so it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single one of you. You guys are very, very wonderful. I appreciate your support. Let's keep that like button. Click on that like button. Let's make the number of likes tally with the number of people who watch the session. Thank you very much, guys, as you do so. So today we were able to take on all the 3 financial assets on our watch list, which includes the XAUUSD, the USOILSPOT, and the GBPUSD, and we were able to identify simple trading setups that we are going to be using to guide our trading decisions for today. And I hope we all marked out these levels accordingly on our charts. And if you had done so, well done and kudos to you all. So let's exercise patience and allow the structures to mature. And if you are new with us, for those of you who are new with us today, I hope you found this content helpful and useful in making your independent trading decision. If you have found it helpful, let's see again on Monday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review and prepare ourselves for the new week. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to be having a well-defined risk management strategy in play so that you don't get your portfolio blown out. So that is very, very important. So it's on this note I wish us all the best of luck today. And for those of you who are yet to subscribe to this channel, if you are out there, please, I encourage you to do so, as interesting developments are going to be coming up on this channel in recent weeks. I'm trying to relate with you more on the same level, and so let's see how things is going to play out. And I'm going to be sharing my ideas for the next week during the course of the weekend, so you don't want to miss out on that one. So give the click on the subscribe button, click on the notification bell so that you can get notified as I drop new videos and content. So it's on this note I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.